Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York. It is Thursday, 16th day of June, 2016, and we are looking at the Dow Jones Industrial Average closing up about 93 points on the day after being down roughly triple digits on the day. As we spoke about on the gold forecast, there's absolutely no doubt we saw these markets really shift, pivot, and take another direction midway through the trading session today. Standard & Poor's also, which was trading lower on the day, let's go ahead and pull that screen up, but which was trading lower on the day, low 2040, closed at 2070, so a 30-point difference from the low, putting it up about 6.5 points, and is currently settled, but going into the afternoon session. We'll certainly want to take a look at that. Oil continues to drop. We want to take a look at that, as well as the dollar, all on today's trending markets. Absolutely a fun-filled day when we consider the kinds of key reversals we have seen, not only in U.S. equities, but in the precious metals. Of course, still dynamic pressure on crude oil. We'll take a look at a crude oil chart in a little bit, and interesting action in the dollar. However, it is U.S. equities that really had a dynamic move in the marketplace today. As I said, Dow Jones Industrial Average, which had been down really for the better part of the day, trading to a low of 17,471, that's right here, was able to really come off of these lows and move solidly into positive territory, and with a relatively large body size, meaning from where the market opened to where the market closed. Now, with that in mind, we can also see the same thing in the Standard & Poor's 500, although within this particular market, much more of a dynamic move. We were looking for the potential for this market to go as low as about 2020. 2020 is this area right here. It is a previous low that we hit. Right now, we've hit a low of about 2040, but we certainly have bounced well above that particular low, just shy of really trading above this critical 50-day moving average. And when we consider the way this market has definitively rebound back to the upside, when we look at the profit taking that came into the precious metals, taking gold from about 1320 all the way back down to about 1280, it tells me that we certainly can be looking at a day that is really predominant reversals in terms of the overall characteristics of the market. Now, one of the keys right now, of course, is the vote next week by the Brits as to whether or not they want to leave the European Union, Brexit, so to speak, and whether you look at or listen to what the polls are alluding to or what the betting houses are alluding to in terms of consensus. Those are really split, with one side, meaning the polls, saying that an exit is actually highly probable. The bets saying that a no exit is more probable in terms of where these statistics are coming in from. That being said, I want to obviously let the dust settle, but we certainly could be looking at a potential reversal in the market, and the key in terms of technical levels, because as a technician, it's much clearer for me to understand that than the politics that are going on. But we would want to see the market really clear and break above this 50-day moving average and stay there on a closing basis. Crude oil plunging again, off 4% on the day. Of course, the kinds of moves we've seen in crude oil, 4% is not the greatest of moves, but almost a $2 per barrel drop from 48 to 46.10. Traders, I have been looking at crude oil once it actually broke below these bands, and that occurred, I widened a little bit, but that occurred on this day, so roughly I think we're looking at Monday or Tuesday of this week. We really forecasted a lower price, and our numbers, and they still remain, would be to see this market trade effectively from about 52 as the highs to at least 46 as low as about $44 a barrel. I believe that that's been our numbers, and those numbers right now seem to hold more weight, or as much weight, as when we originally put this forecast on. So as I said, I believe there's still some more downside in crude oil, and these are the price points I would look for, and that's under the basic idea or assumption that crude oil is going to continue to rise. In other words, those types of corrective market moves, such as from 26 up to 41 and then back down to 35 and then moving back up. In other words, we could see this market hit these highs of 52, back off to somewhere in this area, and then still move higher. Of course, that would change dramatically if we broke below these key points, because at that point, I believe we'll enter a little bit more than just a upside correction. And traders, lastly, I want to look at the dollar. The one thing that we have seen is an increase in volatility this last day. And let's go ahead and kind of size this a little bit better. But daily chart, and what you can see on this daily chart more than anything else is the extreme range we saw and the fact that it basically closed unchanged, 94.62, in essence unchanged on the day. You've got almost a pure doji right here, and that pure doji is coming in above a 50-day moving average. And so is this a consolidation before moving higher again? Well, the one thing is we know that these markets are being driven by fundamental potentials that haven't unraveled. The key, of course, now that we know what the Fed stance is, it's what's going to happen in the European Union next week. And the fact is we don't know. And as that vote comes out, we could see some real increased volatility. I think next week we're in store for a really fun week, to be quite honest with you. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.